study, SOT, which is shortening of the thrust to the upside. And the thrust is at the extremes. As we know, the extremes is either the high or the low. In this case, it would be the highs because we're going to the upside. This is a basic, short little study, just so that we can familiarize ourselves with shortening of the thrust and what it looks like. Okay? Well, before we begin, I must say that the most valuable aspect or the use of shortening of the thrust is when it occurs towards the end of an established trend. Okay? And, you know, a trend I like to call long in the tooth. And of course, this is dependent on time frame and the nature or the personality of the stock or future that you trade, because they do differ slightly. However, the shortening of the thrust, the principles remain the same. What do we note here? Well, we can see price coiling to the upside and we break. We push up to A. As we react, we'll draw this leveling. As we come up and we come down, we can draw this leveling. Then as we push up and we come down, we can draw this leveling. Now the distance from A to B and B to C we would call shortening of the thrust. And here we're using the extremes. The high here, the high here, the high here. On your charts, if you see this, you can just use a pen. You don't need to draw these lines in, but you can just visually note like this. You can just see this high and this high. And that tells us, what does this tell us? Well, one, either the buying pressure has eased off or sellers are coming into the market. And if we look at this bar, close off the highs, selling. Close off the highs and drive it under this close, selling. We pop our head on this bar above here. We've dipped down to reverse and close weak under this close. So we can see that here selling is emerging. But either or, either demand is tied or the sellers are emerging. Like I said, there isn't a great deal to this study. I just want you to recognize this behavior from the highs to the highs. Okay, we can see that the thrust has shortened. Here we have shortening of the thrust to the downside. And this time we're using closes, not the extremes, which are the high and low of the bars. So what do we notice? Well, we can see price round over, kind of sloppy price action, then boom, we slam down at A. Well, yeah, we won't go, it looks climactic, okay. However, we won't go into that now. But what do we notice about bar A? Although we slammed down, we closed well off the lows. Okay, yes, this bar is incredibly weak. We can see it's weak, huge spread, but all this is buying, has to be buying. That's the only way that we can close off the lows is from buying. Okay, and this amount of distance traveled is 3-4 times the size of these average bars. So that is significant buying after we've had this large weakness. And then what happens? Bar B, we dip down, we push up, and then close neutral. However, it's in line with the previous bar. So where's the downside follow through? You know, activity has dropped, and we know that from the spread, and yet we hold the same close. Something is off. We'll be thinking, okay. And then what happens? We push up, and then we hold a higher close above the two previous bars. Now this action doesn't make sense, and this is what we'd call shortening of the thrust in closes. Okay, so let's dissect what's happened here. So from A, we come down from this close to here, we make this much progress. Okay, then bar B, we don't make any downside progress, and then bar C, we're now trading to the upside and we're making upside progress after a potential selling bar like this. Can you see this? The story here doesn't make sense, and this is how shortening of the thrust in the closes can help us. There's nothing really more to this chart. I just wanted to illustrate these basic concepts to you. Okay. Here we have a shortening of the thrust study to the downside, and we're using the closes. So what do we note? Well, bar A, widespread closes on the lows. So we'd say that's good selling, and we know that how? By comparing to other bars prior to this bar. The widest spread we can see, and it closes weak, so selling is good. And then what happens at B? Little progress. We can see just on these two bars there is shortening of the thrust. The force of selling has weakened. The spread has almost halved. And then bar C. C just closes above B. But importantly, there is no downside progress in the closes. Okay, not the extremes. We're not looking at the extremes here. Don't forget, we are looking at the closes. Let's dissect the progress here. So from here to here, we make this much progress. Then we make this much progress, and then we hold. The shortening of the thrust comes in different flavors. The previous one, we came down, we held neutral, and then we made upside progress. Okay, but this is still shortening of the thrust. There's a lot more to this chart. Let's add structure. Now we add structure, it all makes sense. Why? Well, because we're in a downtrend channel. If you remember from last week, this is our supply line, and this is our demand line. And where are we? We are oversold. And what's occurred in this oversold position? Well, bar A, we break. We clearly see that we can break and we close under. Then B, okay, we do get some downside follow through. However, we note and we know that the strength of selling has decreased. Why? Because the spread is smaller. It's half the size. And obviously the thrust is shortened in the closes. And then C dips down under B, finds no further selling, and actually closes above B or in line. It makes no difference. It's inconsequential here. However, what is important is that we hold. Think about it. If bar A is selling, then bar B we can't get going to the downside, but we still make lower prices, and then C we should come down and close weak and get some kind of continuation, but we don't. We hold, and then the very next bar, boom, we're trading back within a channel and we close firm. If we look at this here, doesn't really, we can see the shortening of the thrust, but doesn't really help us. But when we add structure and we can see that we're oversold, and then we hold, we're shortening on the thrust, and then we hold inside here, we have a trade on our hands. Now there is more to this chart than meets the eye. We have began our journey of price action. And what do we notice? Well, look, when we come down, we have good selling. And then from the selling, we kind of hold. Okay, so we come down, then we hold. We come down, we have some good selling. The spread's increased here. And then we rally. And then we come down. But what do we note here? Two things we note. There's three important things here. First of all, look at this. We come down here and then we hold, the sellers hold gains. There's no ability to rally. And then we come down again, touch our demand line, and then what happens? We have a mini rally. Last time we touched the demand line, we went sideways. Okay. Not a lot to read into this at this time, but then we come down and we are unable to touch the demand line. And what do we note in the price action? Close off the lows, close off the lows, buying, close off the lows, close off the lows, close off the lows, buying. Now why is this occurring? We are in a valid channel. 1, 2, 3, 4, 5, 6, 7, 8, 9, 9 clean touches. So we know from last week that this is a very good channel. Don't forget, this is a 5-minute time frame and 3 to 7. This is a 4-hour trend channel on a 5-minute time frame, which we could call old. It's long in the tooth. If you think these were weekly bars, that's 1, 2, it's half a year within a trend. It's a very good trend channel for a 5-minute time frame. Okay, more than half a day. So we are beginning to see a story emerge here. Come down, we touch demand, we go sideways. We come down, we touch demand, we go up. We come down, unable to touch the demand line, and we see buying off the lows. Okay, so buying is emerging here and it's having an effect here as we cannot touch the demand line, and obviously we close off the lows. So what's this action here is like a stop hunt, it's like a shakeout. And this happens quite frequently. You should note this action. I have various studies as we go through this course, but an old long in the tooth trend, they like to slam it down to go stop hunting. Okay, think about all the contracts they've managed to obtain here and get rid of weak shorts, and then they rally back up. When we combine this story here, or valid channel with price action, and then we're unable to touch, buying off the lows, then we have shortening of the thrust in the closes, and then we close back within the channel, odds favour higher prices. It's kind of signifying the end of a trend. Think of it this way. Look at this spread. Look at these. Look at all this price action here. Okay, all this price action in the closes. These spreads are larger than all of these spreads in this whole downtrend. And what progress has been made? We're actually making higher prices after this weakness on this bar here. Okay, hopefully this is all coming together. We have shortening on the thrust in the closes here, trade back within the channel. As we said, we see demand emerging. And then what do these 4 bars achieve? Nothing. It's a stop hunt. Okay, good. Any questions? How would you enter on this chart? Okay, good question. Well, when you can read these subtleties and we can see that demand is having an effect, can't touch demand line, closing off the lows, seeing rallies, clustering, the shortening of the thrust. This dips down to reverse this close firm. An aggressive trade would be to buy C. But then you can also buy the close of this bar as we're within the channel. But you pay for confirmation. Here, your risk is under C. Here, if you buy this, you're paying for confirmation because your stop still has to be under C. Alternatively, what you want to see would be a break of this channel as we do here, and then you want to look for a weak pullback. So as we push up and then we come back down on this bar, we look for weak selling, hopefully look for an entry here. I mean, this is advanced entry techniques, which we will cover again later on in the course. I don't want to overwhelm people or confuse people as yet. However, look, what do we notice here already? Good buying, good buying. Look, the spread's increasing. Then we have a little nothing bar, but we still close up. And then boom, we break. Come down, we rally, we rally, we rally. So we can see that the buyers have taken control on these 3 bars. And now we have a shortening of the thrust, an application study to the upside. So we've discussed shortening of the thrust to the extremes, which is to the highs here. Each successive push higher is making less and less progress, which of course is either demand is drying up as we're pushing higher, or supply is emerging. And we've also discussed shortening of the thrust in the closes. Now, as you've probably figured out, shortening of the thrust implies a struggle, because we're struggling to push up at the extremes, or we can see it struggling in terms of closes. Now here we have shortening of the thrust in the price bars. Now what do I mean by this? Well, look here, we push up, we come down. We push up, we come down. And here we just struggle. We just struggle, and this we'd also call shortening of the thrust, but in price bars. So this is from the extremes. We have shortening of the thrust at the extremes, the closes, and the bars. But I do not use shortening of the thrust in the bars like this. It is a tool that may or may not appear useful for yourself, and you may want to incorporate this into your own trading. Let's recap. We can see shortening of the thrust. Okay, each successive high, each successive push higher, less and less progress. Let's open up this chart a little further, and we do this by adding structure. Now, isn't this interesting? So let's just start from down here. Well, clearly in a trading range, and then we drive higher through our resistance. Good. Spread. Validates. What happens? We come back down to test, as this was resistance, resistance, resistance. This should validate through a good price action. Now should be support. Lo and behold, this is a lovely 2-bar bottom reversal at support. This is our first trade we could comfortably take. Anyhow, we drive up. What do we note? Good buying, good buying, good buying, good buying. We get towards the top here. Close, close, and close. So we make this much distance on this bar, then we make this much distance on this bar, and then this much distance on this bar. So we have shortening of the thrust in closes here. Now bear in mind that this channel here is not working. It's too sketchy. If we draw this in, and then we can see this, you know, that would be a good channel, but clearly breaks. This is not a working channel as yet. So we see selling at the highs with shortening of the thrust. We come down. We have this touch, this touch, this touch. We can now draw our channel. Come down, we become oversold here. What happens? We rally. We weaken the supply line. And then we break with valid price action, wide spread. And then we drive up to B, where we note we have selling off the highs. We rally a bit hard, too fast, too soon. We come back down. What do we now? As we rally from here, we have 1, 2, 3, 4 touches. Plus we have a best fit scenario here. 5, 6, containment, 7, and another touch here. So 8 touches. So now we have this working channel. What happens? We push up, go sideways, boom. 2 bar reversal at the demand line for my channel, which has just been validated. Not only that, I mean, we could also draw a line across here. 1, 2, 3, 4, 5, push through, acts as support, there are many lines I can draw on this chart, but so for all intents and purposes, this is a demand confluence, newly turned support, and the demand line. We push up to C, where we see selling at the highs, and then boom, we close down here. So this action here is an up thrust. So as we react, what do we note? Look at the wide spread down bar. It's the widest spread down bar on the chart. In fact, it may be the widest spread on the chart. Maybe the same size of this. Either or, what does it achieve? It breaks structure. It breaks our demand line and closes under. So this is valid. And this is the power of shortening of the thrust. If we go to here, we can clearly note shortening of the thrust and in the price bars. But when we add structure, just a simple horizontal line, we get an entry point, and then we can also see we have a demand, we have a channel that we're working with, that we can also draw a reverse use of trend line. Can you see how all this is beginning to fit together? If we go back to here, this is, this looks untradeable. Agreed? But when we add structure, now we have a very good story forming. I mean, don't get me wrong. At this 2-bar reversal, I mean, this 2-bar reversal will be traded. Why? Well, because we're still in an uptrend. We have good buying and there's weak selling. We can't test the demand line here. We go sideways, we push up to make new highs. We come back, test, and we hold here. Then we drive up. But here, when we notice the shortening of the thrust in the bars, at the highs, there's not enough demand to reach the supply line from our channel. And also, what does shortening of the thrust mean? Either A, demand is tiring, or B, the presence of supply. So all the elements are working together. And this is how we stack the odds in our favor. We don't apply 1 or 2 principles or concepts. We want to amalgamate as many as possible, and we use the price action as our entries, using structure and our new tool of shortening of the thrust. There are many lines I could draw all over this chart. They were removed because I wanted a clean study for us to work with so we can grasp the concepts. And I'm repeating myself, but we need to work the concepts together. We want to read what's happening with price and structure and shortening of the thrust, and how that we have a picture of demand building, good buying. Then we had some weak selling, so buyers are still in control. And then we can't muster enough buying to push higher. So not only do we have shortening of thrust, we have a reverse use of trend line, where demand can't touch the supply line. We get negativity in with an upthrust, which is instantly resolved or recognized by the market with this huge supply bar. This is very powerful stuff. Excellent. Are there any questions for this chart? Doesn't appear as if there's any questions. Yes, we certainly have picked up the pace. Good, good. I'm glad. Okay, on to the next study.